You would have heard the news reports that another round of hikes in term insurance premiums is imminent. So today we will discuss why are these rate hikes taking place, and two, what can you do to deal with them. Why did rate hikes take place then? There are two trends that are playing out in the insurance market. Term insurance has caught up in the Indian market over the last 10 years or so. And throughout this period, premium rates have been constantly plummeting. At the same time, insurers have had a more adverse claims experience than they had anticipated in some of the customer segments. Now, these two trends, one of constantly plummeting premium rates and higher than expected claims, are clearly not sustainable. So last year, reinsurers raised the red flag. They hiked their reinsurance premiums. You would be aware that insurance companies do not keep the entire risk on their own books. They transfer some of it to reinsurance companies. And for this, they pay a premium to the reinsurance company. So when reinsurers hiked their premiums, that forced insurance companies also to pass on the rate hikes to customers. So last year, rate hikes had taken place in the range of 5 to 40% across insurers. But why are rate hikes taking place a second time now at such a small interval? One reason is that when these hikes had taken place last year, the full impact of the COVID-19 pandemic had not sunk in. Now, both insurers and reinsurers are in a better position to assess the impact and thereby reprice their products accordingly. And the second reason is that last year, rate hikes had not taken place uniformly and across the board. Some insurance companies had hiked their rates, others had not. And even among those that had hiked their rates, they had not hiked it uniformly across all market segments. The insurance market can be divided into many segments based on, say, age, the amount of sum insured that you take, whether you are a smoker or non-smoker, the premium payment term that you choose. So while rates had been hiked in some segments, they had not been hiked in others. What we are likely to see this year is that many of the companies that did not hike their rates last year will do so this now. And among those that had hiked it last year, they will probably raise the rates in those segments where they had not hiked it last year. There are a couple of points that I would like to bring to your notice. One, despite these rate hikes, the term premiums that we pay here in India are among the cheapest in the Asian market. And second, term insurance is one of the most important products in our financial plans. So the fact that rates are being revised should not deter us from buying term insurance to fulfill our needs. The steps you can take to minimize your cost of purchasing term insurance product. Most obvious trick you can use is to go and buy immediately before the new rates kick in. Another is, if you are younger, buy right away. Do not wait for a few more years. When you are younger, the term insurance premiums tend to be lower, and then you get locked into that rate for your life for the entire duration of the product. Term insurance is not like health insurance, where the premium gets revised every 2 or 3 years. Once you have started working and you have dependents, buy the amount of term insurance that you are eligible for. And every year or couple of years, reassess whether you have the right amount of coverage. Suppose that your liabilities go up, you take a home loan or something like an education loan. These are large liabilities. In that case, you may need to add to your sum insured. Another thing that will help you save on the cost of term insurance is if you do an online comparison. Go to the website of one of the online insurance aggregators, enter your profile and the website will throw up a whole list of insurance companies and their term premium rates for your profile. Choose something that suits your pocket. Buying online will also help, because when you purchase online, you do not have to pay the insurance agent's commission. Also, go for an appropriate premium payment option. Suppose that the term premium that you buy will has a total tenure of 30 years. You can choose to pay the premium for 10 years, 20 years or 30 years. When you choose a longer premium payment option, that reduces your annual premium. Another thing you can do, which will help at least psychologically, is that you choose the monthly payment option instead of the annual payment option. I would also like to say a few words on choosing the right insurance company. One, look at the claim settlement ratio of the insurer. This is a figure that tells you something about the propensity of an insurance company to pay up when an insurance claim arises. So the higher the number, the better it is for you. Another key figure to look at is the solvency ratio. This tells you something about the financial strength of an insurer, and obviously you would like to go with a company which has stronger finances. And one last word on selecting term insurance is that don't necessarily avoid a company that asks you to undergo a medical checkup. A lot of insurance buyers tend to do that. They prefer companies that will give them a product without asking them to undergo the medical checkup. This is not the right attitude to take. The reason being, once you have undergone the medical checkup, your purchase becomes more foolproof. The insurance company will have lesser reason, or it will not be in a position to turn down your claim as and when it arises. I hope you found this video useful and you will be able to buy the right product.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.